All right. Hello, everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. This time is millionaires. Millionaires. Okay. We're going to assume we have an income of 1.05 million, $1.05 million. Okay. And we're going to assume that our income is exactly the same as our expenses. And if you didn't know, this is the after tax income. And, $6,000 a month in monthly in after tax is about 100K salary. So I don't know if you knew that or not. So we're going to assume that we're making this baller income with the same amount of expenses and nothing left over. Why do we have nothing left over? It's because we have too much credit card debt, 5 credit cards, right? We have two decent sized auto loans. So I'm assuming instead of, we talking about $50,000 cars are usually like new Lexus, Mercedes, or BMWs. We got new trucks. That's how rich we are. We got new trucks. Amazing, right? We got a student loan. Maybe one time we went to graduate school, MBA, and then we got a mortgage for $1.7 million. And our general expenses is about $4,000 a month, right? 4,000. And our whole goal is to get rid of all of this debt. And here, get rid of all this debt. And then here, we're just going to only pay for our general expenses. Okay. And so what we're going to do is something called velocity banking. So what's velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of a line of credit. Okay, a line of credit. So what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. So in my real life example instance, I can click a button and then the bank will lend up to $280,000 into my checking account in an instant. Like it'll literally take like zero point 0.1 microseconds or whatever, and then they'll charge a 7.5% interest rate. 7.5%. Right. And so in this example, we're going to assume we have access to a free and clear line of credit. And let me go ahead and kind of cheat. 150, 270, 300, 280, 100. And let's see how much credit card debt that we have. That's about 1.1 million. So let's say we have a $1.5 million line of credit. 1.5 million. Okay. And I know some people are like, well, can you start off with a more realistic example of, not a free and clear line of credit, folks? That's what the 99-cent paid membership is for. So if you want access to that live stream where someone had 22 debts and a maxed out line of credit, go ahead and click there. But this is the free demo. So for the free demo, I'm going to be lazy and assume we have access to a free and clear line of credit. But here's the thing. If you are at a zero savings balance, right? Zero savings, just be aware that banks don't lend money to people who need it. And so if you're like trying to get a line of credit here, that's like kind of trying to like get car insurance after you crash the car. Don't, get if you're going to crash a car, newsflash, get car insurance before you crash the car, right? So that's how you kind of think about getting a line of credit. It's kind of like an insurance policy in a way. And we have to understand that banks don't lend money to people who need it. Okay. But what if we did have a huge line of credit? Okay. Here's how velocity banking works. You're not going to save any money intentionally. So the difference here is like with the average American, you're ashamed you're not saving money. Whereas when you do velocity banking, you're just not saving money the whole way through. And then you're going to use a line of credit to help you not save money because you're going to use it as your what we call your main operating account, and then we're going to have something called cash flow to pay down our debt. And if we pay down our debt strategically in a certain order, then we'll pay it off relatively quickly. Okay, so let's go ahead and move all of this credit card debt into the line of credit. So that should be like 1.1 million, 110000000. Is that 1.1 million? All right, great, 1.1 million, and then this is going to be 00000. And so now we have five credit cards, and we literally went from $0 to 36 grand in an instant. Oh my goodness, how do we do that? This must be clickbait. Is it clickbait? I don't know. I'm just kind of repeating myself over and over again. And I always wonder, it's like, is anybody actually watching this thing? Actually, I know you're watching because the statistics tell me that you're watching deep and heavy into these videos of just me doing Excel. In fact, take a look here. Making about $200 a month just doing Excel spreadsheets over and over again. My goodness. Let's see how much people have watched. Almost 500,000 views and 57,000 watch hours. All right. So I know you're watching. You can comment. I know a lot of you are a little bit shy, but I'll also take that as you're studying this very deep into studying, so you can't comment. So no worries there. All right. All right. So now let's go ahead and do this. So the last step is we put our entire 50 grand into the $1.1 million debt, take our $16,000 of expenses out, and then every single month the balance of the line of credit will go down by about 36 grand. And so what we're going to do is we're also going to need to calculate the interest based on the average daily balance, right? 0.08, and then divide by 12. So you multiply by the interest rate, and because it's calculated monthly, whoa, we only pay 7 grand of interest, not anywhere near a million, right? So pretty sweet, right? So let's go ahead and do this, and then we see, whoa, we already paid off $100,000 in like 4 months. Whoa, you know, look at that. Bank doesn't want you to know that, especially if you're a millionaire client. They just want you to pay that sweet monthly huge payment because they can make all the interest. Okay, all right. So 34 months, we paid off the credit card debt, so that's going to be 1.1 mil, right? Right. All right. All right. All right. And then let's go ahead and pay off not our new luxury vehicles, but our new trucks, right? Our new 80 to $90,000 trucks. That's how much of a baller we are. So it's going to be 34, 34, 34, 34, right? And then here we take these balances and move them into the line of credit, right? And if you don't know why we start with these, is we have this ranking system called a cash flow index, and we usually just take the lowest numbers and dump them into the line of credit. So we're going to go ahead and do that, and I am going to go ahead and calculate this, and I'm going to save this, and then this is going to be 79 grand, and I'm going to do this, and this is going to be plus 79403.91. All right, so let's go ahead and increase our cash flow by about $3,000. So now it's about 39 grand. And then I'm just going to do this right here. And then this is going to be minus 39925.91. All right, and then I am going to save this, and then yep, and 39 grand, and we just paid it off in 2 months. So 2 cars. Well, this is really simple. So 36 months, and how much is this? This is 1.1. So 110000, right? Plus 84000 plus 90000, and then 1.274 million. So 1.274 million. All right. So we got that. We got that. And then now let's tackle on the student loan, which is, we'll see what we have at 36 months. So this is 0, 0, 36, 36. All right. So just a few notes here. Normally we don't try to move amortized loans into lines of credit if there's an interest rate difference, unless there's a significant amount of cash flow, right? So usually when you're at the end of the life of the line of credit, you get that cash flow, but ironically, you've paid most of the interest, because if you're just making the monthly payment, most of it is interest in the first payments, unless you overpay deliberately. But again, we're being strategic about the order we pay off the debt. And now this one, because it's 7%, okay, I'll move it into the line of credit. But usually the safest method, especially if there's an interest rate difference, is by using what we call the chunkster, or the chunking method. I don't even know why I said chunkster. All right, 153,860.65. We're gonna move that into the line of credit. And how much did that increase our cash flow. This is 0 by $2,000, and now we're at 42 grand. Whoo, we got rich people problems now because it's like, what do I do with my money? Right? And if only these Hollywood celebrities knew about this, and they'd easily be able to pay off their debts in their homes, but they probably don't know that. 42248.08. All right. And then now let's go ahead and see how long it takes. Whoa, 40 months. We paid off that student loan. That was quick. All right. 40 months. All right. So 40 months. And then what we're going to do is 1.474 mil. And then 1.7 million here. And I'm going to do 40 months. And then now with this one, we're going to use what we call the chunking method. Now, if you know anything about the cash flow index, all it is an arbitrary formula that gives you a number. And the higher the number, it means that if you pay this loan off, you get such itty bitty cash flow for paying it off, right? And so this is where we have to kind of take into account interest rates. But if we do something called chunking, right? Chunking is just taking a part of a loan and moving into a line of credit. It's not going to be that much of a worry compared to moving the whole thing, the whole loan, or replacing the whole loan with the line of credit. And you might see some velocity banking YouTubers, cough, cough, you know who I'm talking about, um, tell you to always just, get rid of the loan, move it into a line of credit. And then I'm like, all right, well, there's a difference between just partially moving a loan into a line of credit versus moving the whole thing. But luckily, we have this velocity banking calculator here to kind of help us determine the payoff and what the difference between moving a loan to a line is. All right, so 1.7 million is the current balance. So this one is 1.1577, 436.2, 436.2. And then what's the payment amount? It's 7167.27, 7167.27. All right. And then what's the current income right now? It's everything except for the loan we're trying to pay off. So it's or not, wait a minute. What am I talking about? It's the income's right here. 53,415.35, 53,415.35. And then we'll do a chunky amount 60,000. Okay. And then blam 2.8 years to pay off 1.5 million. See, isn't being a millionaire easy? Oh my goodness. People complain how they don't make enough money. Just be a millionaire. No, I'm just kidding. That's not how life works. Although sometimes I feel like it kind of does. Like I remember when I used to hear that and I'd be like really offended, like, oh yeah, yeah, just make more money. And it's like, dang, you just make more money. I mean, like sometimes, and I'm gonna give you a hint about how to make more money. The marketplace that you're associated with gives you more money even though you don't have to be better. So what do I mean by that? Like the hardest working grocery store or Amazon worker is going to make less than the most incompetent doctor. Why is that? It's because of the marketplace that they're associated with. And a lot of people don't understand that. They don't understand market dynamics. And, it's just kind of like basic economics 101 that people kind of disregard because um, market economics does not care about how hard you work. But the average person is trained to kind of believe that, and that's why they're broke, right? All right. So 2.8 years. And a quick plug for Renatus. So if you don't know, this is where I learned velocity banking from. But if you want to learn a little bit more, just a little bit more, click the Google form link below. Full disclosure, I make commissions from selling the stuff. So it's kind of like me being a reseller. Um, and yeah, what was my point? I don't even know. Like, click the Google form link below and give me my money, right? Give me the money. Actually, if you know anything about me, I paid off my mortgage in 2 years and 9 months, and I understand the game with the banks, which is banks don't lend money to people who need it. Sometimes people actually go on Zoom calls with me and act like I need their money and like totally offended, and then I never want to talk to them again because they're just a waste of time. And you might say that's really harsh, but if they're gonna play that game, they're actually gonna affect my brain. If you get where I'm coming from, and make me believe that or actually pull me into their frame of mind where I need, I need their money when I don't, you know. Like, banks don't lend money to people who need it. Like me, I know I say this all the time, but you really got to brainwash yourself with this stuff because the average person doesn't understand this. So if you're a poor person, and I know I'm going on a little rant here, if you're a poor person, worst people to sell to is poor people because poor people do this thing to other people where they're trying to like, what do you call it? Is it like putting a carrot over a stick or something like that? Where it's like, oh yeah, yeah, I'm gonna buy from you, and then they never buy. You know what I mean? Like, and if you're poor and you need that money, you're gonna get your hopes up. I'm telling you, you sell to rich people, we'll just give you money, you know what I mean? Because we need a thing solved. Like, if we need a pool cleaned or lawn mowed, like, do you think we're gonna do that BS of pulling a carrot over a stick over other people? Like, oh, like I think I might pay you. No, really need the lawn mowed, right? Like, you understand that? Like, anyways, let's take a look at this before I start or I finished this velocity banking review. Yeah, so 19 grand. Like, do I really make this money? I don't even know. Must be lying. This must be one of those Ty Lopez psyops. Whereas, like, here in my garage, I make a lot of money or something. I don't even know. Do I even make this money? Well, here's the thing. I just have plausible deniability, so I'll just say I'm uh I'm rich, or pretend to play a rich person on YouTube, right? Oh man. All right, let's go ahead and finish this off for today. 2.8 years. What kind of crack is this? Oh my goodness. All right. So that's about 6.13 years and we are debt free. Okay, so how much debt? It's 1.4 plus 1.7, or 1.474 plus 1.7. That's about 3.17 million. 3.17 million. Whoa, in 6 years. Isn't it sweet to be a millionaire? My goodness. The power of that cash flow. My goodness. I gotta teach you all how to do these spreadsheets because y'all keep acting like Excel is this brand new thing that came out on the market this year, you know, but it's been here since the 80s. Stop using a whiteboard. Okay. If you're a millionaire, buy a laptop. I was talking to a nurse friend of mine, and I was like, dude, stop using your son's laptop. Buy your own. You have the money. Well, I didn't say it like that. I said it a little bit nicer, but you know what I mean, right? Like I said, listen, don't you think if you were like the hospital CEO, like it'd be ridiculous that you're not using your own company laptop to do business? Like you're using your son's laptop, and then I was like, you know what I mean? Like, take yourself a little bit more seriously. You know what I mean? Most people don't. They don't. I'm disappointed, but it's okay. I still love you. All right. Have a great day, everybody. This is Korean Lanta Mentorship, and I'll see you on the next video.